Hello traders. So I've decided to actually take it upon myself to actually share our knowledge out here. So I'll be starting my free teaching session, right, with a topic called basic market structure. Okay, so before we go into market structure, we first need to check like how can learning this market structure actually help you as a trader. You know, as a trader, in order to be profitable, you need to identify where the market is coming from, where it is at the moment, and where it's going to. So market structure actually helps you be able to identify that, meaning it actually helps you to be able to identify trends. Okay, so basically there are three types of trends in the market. We have an uptrend, we have a downtrend, and we have a sideways trend. These are just the basics. The sideways trend, or some people call it consolidation, some people call it ringing market, choppy. You know, there are many terms to this, but at the end of the day, it is exactly the same. Okay, so how will this market structure, how will this help you? This will help you to be able to identify where you are in the market and whether you should wait or you should take a trade, or like it just helps you to actually identify where you are in the market. So before we go into that, let's get directly on chart so I can show you guys the different three types of market structures. Uptrend. An uptrend is made up of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This simply means the market does not just move up in one structure, either just up straight or down. No, it actually moves in structures. This simply means BOS. BOS simply means break of structure. This simply means market has actually break the higher high here, and he has gone up to make another higher high. The reason this is called higher high is because this high here is higher than this previous high. Why this is called higher low? Because this low here is higher than the previous low. So an uptrend is made up of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This will help you to be able to identify in the market if you're actually in an uptrend or not. So let's go on live chat so I can show you guys an example. This is on Euro USD 4-hour time frame. You can see here this was an uptrend. You can see here this was an uptrend. It's on live chat. So you see the market came up here, made a higher high here. It's okay, I've not yet noted them down clearly, but you can see all my arrows, right? The market came up here, made a higher high here, made a higher low, made a higher high, higher low, higher high, higher low, higher high. This is just an uptrend, okay? This is an uptrend. This is a live example of an uptrend. The best opportunities to take in an uptrend is buy opportunities. Every after break of structure, we have a higher high, then a BOS, we have a higher high, then the market come and make a higher low. You see, right? When the market make a higher low, try to target the higher low, buy from the higher low, and target another higher high. You see, right? But your first take profit should always be here, this equal highs here, and then your second profit can be up. Then that same thing, it comes back down to inside your higher high. You buy at the higher low, target the higher high. You can see, right? That's how you'll be able to make money in the market using market structure. This is downtrend. So downtrend is simply the opposite of an uptrend. So you can see now in the downtrend, the market is simply descending. It's made up of lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So the reason this is called lower highs is because this high here is lower than the previous high, and you see this high here is lower than the previous high, this high here is lower than the previous high. And the reason this is called lower low is because this low here is lower than the previous low, this low here is lower than the previous low. So you are constantly seeing price dropping down, but it's forming buys and sells, giving you buy and sell opportunities. But the best opportunities on the downtrend is sales. Okay, make sure you try to sell from a lower high to a lower low, sell from a lower high to a lower low, sell from a lower high to a lower low. So those are the best entry points in the downtrend. Why? Because you need to always follow the trend, and the trend is your friend. So let's get on live chat. Let me show you guys a live example of how this actually looks like on the real chat. This is a live example. This is Australian dollar USD, the daily time frame. See the market leaves here, comes down, made a lower low, made a lower high, comes down, break structure, make a lower low, instantly make a lower high back, break structure, and goes down, make a lower low. So like I was telling you guys, the best place to the best opportunity to take in a downtrend like this is to look for sales. Anytime the break of structure happens, wait for price to retrace and come back in, you sell. You see how huge it could happen, right? You see how huge it could happen. And not only that, you'll be taking huge profits and huge risks to reward when it comes to this kind of trades, but you'll be following the trend, and that is going to increase the probability of your trade. Okay, so let's go to the third one. We also have the sideways trend, right? So the last is the sideways trend. Now the sideways trend is a little bit different. When it comes to the sideways trend, some people call it the consolidation market, they call it the ringing market, and so on. This is simply because price is just at the range. Price starts consolidating up and down. So price making equal highs, equal lows, equal highs, equal lows, equal highs, equal lows. When it is ranging like this, at some point you see price will either break down, go up. So let me just show you guys right away. So at some point you see price will either break down, retrace, and go down, or you will see price go up, break up, retrace, and go down. These are the two possibilities of what can happen when the market is ranging. So this normal basic market structure, so it can range, then it makes a higher high, it makes a higher low, it continue up, or it can range, then it breaks down, it makes a lower low, makes a lower high, then it continue going down. So this is how a sideways trend occurs. Let's look at the live examples on the chart. Before we look at the live examples, basically when it comes to the sideways trends, the most important thing to do at this point is just to wait for the market to either break up so you can buy, or you can break down so you can sell. Remember, this is just market structure alone. Trading comes with confluence. You need to be able to add multiple things into what you have here to be able to trade smoothly and consistently. So for now, this is just basic market structure. Try to identify your own chart. Let me show you guys the live chart. This is GBP USD 2 hour time frame. So this is the market here. Market's coming down. It's consolidating, right? So it's ringing. You see, it comes down to make an equal low, equal high, equal low, equal high. So you see, this is the range here. It's simply range inside here. And as soon as it breaks down here, you see it came back, this retracement, and it fell down. So anytime you are seeing this consolidation zone, always wait for a breakout. When the breakout comes, you see this breakout structure to here. It will come and make a lower low and a lower high, and it continues. That's just basic market structures. It's just basic market structures. Just with the help of this, you'll be able to identify where you are in the market. And once you're able to identify where you are in the market, at least you will know if you're actually looking for buy opportunities in the market, or you're looking for sell opportunities, or it is time to wait. So let's do a quick recap. Okay, we have three main trends in the market. We have an uptrend, we have a downtrend, and we have a sideways trend. And I advise traders trade on mostly the trending trends, either the uptrend or a downtrend. When it's a sideways trend, always wait for that breakout. Okay, as I later on said. So so it's left for you to do the homework. Make sure after this video you go to your charts, trying to see if you can identify and map out the bullish structure, a bearish trend, meaning an uptrend, and a downtrend, and a sideways trend. Once you're able to map out that, you'll be able to move to the next stage. Okay, but make sure you do your homework, because all what I'm giving you out is just knowledge. For you to be able to digest that knowledge effectively, you need to actually do the homework. Okay, so please like this video, drop a comment on the next topic you want me to definitely cover, and then give us a thumbs up. Subscribe, follow me on TikTok if you watch this on TikTok, on YouTube. Subscribe on IG, please give me a follow. Shout out guys, see you guys on the next topic, and drop a comment on the next topic you want me to cover.